What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. Today I'm joined by Steve Trang. How are you doing today, Steve?
I'm doing fantastic. I'm looking forward to this.
Excellent. And speaking of looking forward to this, I'm looking forward to this too, because I don't know if you know this, but today my very favorite audience member has joined us. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, investors, and all that sort of thing. And you may ask yourself, why on earth would somebody do such a silly thing? Well, if you know about the SEC requirements to have a documented prior substantive relationship before you involve somebody in your partnerships as a limited partner or a general partner, then you'll understand why it's important for me to know level of sophistication, appetite for risk, core competencies, and contribution to the deal. And the best thing for you is you also learn how to effectively communicate on the subject of commercial real estate deals, which I think is going to be the real maker or breaker of your career in this industry. But before we get too deep into real estate, Steve, do you want to say a thing or two about yourself?
Yeah. So Steve Trang, Real Estate Disruptors. Most people know me from either the podcast or our sales training. I'm really passionate about sales. I love talking about human psychology. It's just a very fascinating topic that I think there's really no end to how much you can learn about human psychology and behavior.
Totally agree. Totally agree. And that's actually why I include the five distinct motivations in every episode. But before we get to that, I got to say, but wait, check your eight. Steve, I don't know if you can see through your camera and down there, but the audience, they might have this hideous subscribe button, and maybe like if they can get rid of it really. Okay, it's a stupid joke. But anyway, I do it in every episode. Not so subtle reminder. The five distinct motivations. I've now spoken to hundreds, possibly even thousands of different investors, and everybody has their own unique why. It's super important for people in the business to know what that is, just to make sure that people are going to follow through with the deals. After all, they take months to close and years to go full cycle. So it's going to be very important. And even though everybody has their own unique why, I find they fit pretty well into these five different categories. The first one of which is preservation of purchasing power. What on earth is that? Well, some people don't have a W-2, they don't have a regular job, and the way that they pay their bills is from the proceeds of ownership. In other words, they've got a portfolio of assets, and that is how they pay their bills. So if you're already in that situation, why would you bother going through the hassle of another acquisition? Well, there are a few scenarios. One of them is if inflation is rearing its ugly head, that's going to eat away from the purchasing power of your cash flow. The other circumstance is if you can buy at a steep discount because of distress on the property or maybe an asset crash, then that makes sense to make another acquisition. I am not at that stage of my life yet. What I'm up to is trading time directly for wealth. I have a background in tech. I've owned a CRM agency since 2011, and I got into real estate in 2014. And as I watched my boss, who was flipping 10 houses a month, or at least doing 10 transactions on single family housings every single month, and I found out what the tax advantages are when you are mostly getting your increase in net worth in the form of deployed capital, aka wealth or equity. And it hit me as like, that's what I got to do. But that's a little too subtle for some people, especially youngsters. Youngsters, they frequently want to hustle like crazy right now and fast track their retirement. Other people, they just want to gain control of their schedule. And that might mean that they work fewer months per year or fewer weeks per month or something like that. And that's fantastic. And a lot of people who have this as a motivation, they think everybody's like this and they're just trying to hide it. But I'm here to say that's not true. Some people are just plain ambitious. They want to buy their entire hometown. They're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they are constantly hustling, and they're going to continue to hustle into their 90s. So they're great people to have on your GP team, just like this last group, but they're not so much focusing on having their own name and lights or huge yachts or buildings or whatever it is. They've found a sector of society. Maybe it's animals, maybe it's the environment, maybe they want to send people to space. Who knows what it is, but if you want to make a really big impact, there's a financial component to that, and that's why some people are making their commercial acquisitions. So Steve, as far as you go, those 5 different motivations, what combination of those would you say describes you best?
I would say at this point in my life, it's more about preserving the purchasing power. There was a point in my life where it was about time and there was about buying the market. So domination, control my schedule, that was the priority. Now, preserve my purchasing power.
I love that answer, and I know that you're such a fantastic salesperson. I know it's something that you do even if you had to do it for free. But
Yep.
every business has risks, and commercial real estate is no different. And if you've ever been involved in a 506B deal, the securities attorney in the mix should have insisted that everybody fills out this super invasive financial questionnaire. We're talking answers where the person who reads it's going to know more about your financial situation than you know about your own parents in all likelihood. But one question in particular jumped out to me because I felt like I couldn't really use the information it gave, and that is the tolerance for risk assessment. So I've got a fill in the blanks questions for that, and it's there are many popular investment asset classes, but I think blank is too risky. So Steve, it can be inside real estate, outside real estate. You can do both if you want, but what's too risky for you?
The only thing that's too risky for me is where the downside is, it's a permanent game over. So, I've always had incredibly high risk tolerance. But the things I would never do is jump out of a plane or go spelunking, right? Or going to check out the Titanic. Um, and so then I think in real estate, it would just be anything where I could potentially get over leveraged in a massive shift in the market. So, you know, if interest rates go from, for example, 4 to 9, right?
Mm-hmm.
That could put you in a really bad bind. So anything where if things go wrong means you start over, that's too risky for me.
I love it. I love it. And I love what you're saying about jumping out of planes and stuff like that. Ever since I had my first kid, all that was going through my head is if I did something like that and it didn't work out, I'm sure that kid would be asking for the rest of their life, why was jumping out of a plane more important than spending the rest of your life with me?
Yeah.
And if you don't have a good answer for it, then I don't think you should do that. But the next segment I have here is the favorite deal metrics. And one of the things you need to understand about commercial real estate is it's multifaceted with multiple different roles. Some people are numbers people, some people are people, and all of the numbers that I'm going to mention here, they're all absolutely pivotal and key for underwriters. But some people, they're more at the top of the line, not doing the deep dive into the numbers, but everybody should have some sort of number that they lead with. And the purpose of this section is if anybody in the audience has any deals, they know what the headliner should be for you as far as your priorities. But for anybody in the audience who is only listening and not watching, I'll read out this list of different metrics, and maybe Steve, you can pick your top 3 or something like that. The first one's cash on cash. Second one's IRR, then cost per door, then NOI, which is net operating income, going in cap rate, loan interest on the loan there, the occupancy rate, the average income in the area where the property is located, the amortization period of the loan, the difference between the market rents and the in-place rents, population growth where the property is located, the sponsor record, which includes how many deals have gone full cycle, the waterfall or split. I'm also going to tie that in. That's an exit strategy baked in there as well. So that might be the key thing. And then the last one I have on this list is debt service coverage ratio. And of course, these are leaning more towards multifamily. But Steve, which ones do you tend to focus on first before doing your deep underwriting?
So if I'm doing commercial, it's for sure cash on cash, right? I want to know what I'm getting on this. The my only involvement in apartments, I've been as a limited partner.
Mhm.
So I look at cash on cash. I look at what's my stake or equity after I get my money back, right? And then what's the potential outcome?
Mhm. Mhm.
Like, what are we looking like when we exit? What are we making here? So I would like that to be a big number. That's not a fixed number. I just want it to be a big number. But I'm looking for cash on cash and equity after I get paid back.
All right, I love it. I'm eating that up like a subscribe sandwich. It's my very subtle reminder there, and it tells me it's time to bring out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial deal. And the reason I go through it is because, once again, it's important for me that you learn how to effectively communicate on the subject of commercial real estate, because if you want to have a future in this industry, that's what it's going to depend on. But it's got the 6 different roles, and I go through it in every episode just to make sure not only can you understand where my guest fits into these deals, but you can also understand that nobody is going to be all 6 roles for any meaningful amount of time on their own. So let's do this. If you want your own copy of this, it's absolutely free. And like a complete dummy, I didn't even ask for any contact information. That's the cardinal sin of marketing, is to give away your freebie and not ask for like an email address or something like that. But it's really important to me that you get really good at understanding these different roles. And when people first start, they are repositioners of some sort. So they're going to be doing lots of paperwork. They're going to be looking at lots of different deals. What are they looking for in that paperwork in those deals? Well, the paperwork, the first thing is underwriting that they have to do, which means they have to do the math. They have to figure out, first of all, is this seller or broker even telling the truth about how much this property actually makes? Because okay, so the repositioner has to be able to figure that out and figure out which property they really want to go after. And one of the sort of unusual things about being a commercial real estate repositioner is you have to have a wide network of financiers, which is, of course, people who only deal with paper and money, and very select people who are running the deal. But a financier is a lender of some sort. And the reason why repositioners need to know lots of lenders is because if they can secure a more advantageous loan, that goes straight to the profitability of the building. So that's why they have to know lots and lots of financiers of every walk of life. But the more traditional place for a repositioner to find more upside is checking into operations, finding out where those Benjamins are going down the toilet and doing something about it. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns. I'm from the internet. So that means everything I do is going to be remote based. So my contributions tend to be the web assets, the automation, the CRM. And then, of course, there's a marketing piece, which is kind of unintuitive. Personally, I go for deals where it's 100 units or more. And generally, when that's the case, you outsource your property management to a third party. So why would you need more GPs? Well, you're going to need somebody who recognizes that vacancy is the enemy. And so if they cannot fill those units, then you need somebody with some serious marketing chops to help you out with that. But of course, there's only so much you can do with operations to find upside. So the next place the repositioner is going to look is they're going to get a contractor team involved to upgrade the units, to make the property nicer. The idea being that the future residents or tenants will end up paying more in rent than the previous one, and they'll be happy to do so. But of course, you have to be careful when you're upgrading with contractors, because it's all about return on investment. So you don't want to be gold plating those toilets. And if you're like me, again, I'm from the internet. So I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that's not going to be me. I'd still be stuck at an airport in an hour or two. So those locals are a pivotal part in a lot of repositioners' businesses. But let's do a hypothetical. You're now the repositioner. Let's say you're a physician or an attorney or an engineer, something like that, and you get the idea, what if me and my pals, we chip in 50 or 100K each, and we take over that 350 unit apartment complex that's just down the road? Well, when you turn around to the financiers and say, hey, I got this 350 unit apartment complex I want to take over, it's tens of millions of dollars. Hey, you don't want to lend us I don't know, tens of millions of dollars, do you? Well, the financier is going to have another question that I haven't addressed yet. And if you're in a guru or mentorship program, you should listen carefully because they often really, gloss over this one. The financiers are going to say, who's the sponsor? Who's the KP? What's that all about? If you want to get a commercial loan for a 350 unit apartment complex, you're not going to be eligible unless somebody in the fold already owns a similar asset. And then on top of that, you need a certain amount of liquidity. And then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So, Steve, I know that you do some great work with financier relations, but I don't know really which boxes you check, and I don't like putting words in people's mouths. So which
Yeah.
boxes are you most likely to check?
The box I'm most likely to check is the doctor guy,
The
right?
doctor.
Like, yeah, I mean, just putting money into it. Like I said, my only experience has really been as an LP. This I've never done the work to get into this world. What I do know, because you're talking about like checking the boxes, make sure everything looks right, is I know that pro formas are exactly that, pro formas, best case scenarios, right?
Mm-hmm.
So this is something that is on my to-do list to check it out, but it's never been a priority.
Mm-hmm.
So for now, is if someone brings a deal along, and there's someone I trust, I know, like, and trust, and they say, okay, well, I mean, if you already own apartments and you look at this deal and you like it and you need some funds, let me take a look at it. So
Mm-hmm.
that's where I sit. I probably, if I wanted to turn this spigot on, is I could probably bring a lot of money to the table and raise a lot of capital, but it's never been a priority.
I love it. I love it. Yeah, that's perfect. So let's talk about buy boxes then, and then if you want to take it into whatever other focus you have, then that's perfect. So when real estate people are asking each other, "Hey, what you looking for? What's your buy box? What's your ideal property?" We're really asking about three main things. The first one's geography. Where is it? Which state? Which county? Possibly even which neighborhood? Okay. Before it's going to be called ideal, that's absolutely going to matter. The second one is size. And most of my guests on this show focus on the multifamily apartment complex investing. And the way that you define size in apartment complexes is by the unit count. And the reason why it's important for people in this business to know what the unit count is, it's because the groups that take over 10 and 15 unit apartment complexes look completely different from the ones who take over 150, 200 unit apartment complexes. So that size matters. Other forms of commercial real estate go off of square footage, like industrial and whatnot. There are some others that also do unit count, but that size is still going to matter. But the third one, I'm going to call it desirability, but the most common term is class. And the reason why I got a beef with the term class is because it has two different meanings. One of them is the condition, the other one is the area. And when you're talking about condition, we're talking about how old is it? How beat up is it? How many luxuries and amenities are included? Okay, that's the condition. But the area, especially if you're talking about an apartment complex, you're talking about what are the school districts like where that property is located. You also want to know what the crime rate is like. And then, of course, there's that old trope they say that real estate's about location, location, location. I don't like that saying because I don't think it's very informative. What I think they mean is traffic, traffic, traffic. If more people go by a certain location every single day, it's going to be more valuable. But both the area and the condition, they're both ranked the same way as in grade school, where you got A plus at the top, and then A, and then A minus, and then B plus, and so on. So, Steve, as far as you and your organization goes, when it comes to deals, like I understand that you got your LP experience in the past. If you want to talk about other types of real estate that you focus on, that's fine too. But what's easier for you to say yes to? What really gets you excited?
The What's going on with the demographics? Is
Mm-hmm.
this an area that's growing or not?
Mm-hmm.
Right. So if it's a growing area, size count doesn't really matter too much to me as much. I probably maybe it should, but for me, I care about demographics, part of town. I would say those are the things that matter the most to me because I want to know that this is a secure investment. Like I have my crazy stuff as running an organization. That's the crazy upside. That's the headaches. So with that going on, the real estate, although great, is how do I put this? This is the tax write-off. This is the the steady Eddie, right?
Mhm. Mhm.
This is the reliable side
Mhm.
because I'm crazy on the operation side.
Yep. I love that. I love that. So it sounds like you're somewhat deal agnostic, and it's more a story of the sponsors and those sorts of
The
straight out
people.
numbers. Yeah, exactly. The people themselves. That's fantastic. And speaking of people, let's talk about them. My favorite thing about commercial real estate is because nobody's going to be all six rolls on this die for any meaningful amount of time. It means that everybody is focusing in on one or two of these different roles, and they're letting other people do the others. And that means we're really eager to give referrals, build new teams, put it all together. But our own unique skill sets means we're going to be better off helping some people than others. Me, with my marketing, content, and tech background, the sponsors and KPs are the people who I can help disproportionately more, just because they've already got the real estate foundation, where a guy like me can make a really big difference. Whereas when you're first getting started as a repositioner, you need grunts. You need people who can put in 80 to 120 hours a week, and that's not going to be me, because it's not where I'm at my most effective. So I'm always eager to talk to other repositioners and locals. But Steve, as far as whoever's out there right now, if you have any 506B deals, don't mention them specifically, especially in the same breath as an investor slash financier. But who's out there in the camera who you can help the most?
Um, Man, who can help the most? I would say whoever is, are you calling the person as the repositioner, the one that's direct to the apartment owner?
Yeah, so with the repositioner, I'm using it as a proxy, not only for the person who's actually like doing acquisitions
Mhm.
after underwriting it. I'm kind of
Yeah.
blending in the bird dog and the wholesaler as well, just because I don't want anybody admitting to doing anything
Yeah.
illegal on a podcast.
Yeah.
So
So yeah, the repositioners. I would say the repositioners because what, uh, and I guess we kind of include them with the GP component. Whoever's talking to people the most, I think that being able to lead others, modify behaviors, influence and persuade, that's that's my superpower. Being able to help others become effective at not necessarily changing people's minds, but helping them to understand that working with you is best for them, right?
I
And
love.
so yeah, so that's my superpower. And so whoever is talking to the owners, whoever is raising capital, whoever has to lead the contractors, whoever these people are that have to have high quality, effective, high stakes conversations, that's who I can help.
I love it. I love it. And then let's talk about how to reach out. Me, I've got this distinct last name that makes me super easy to find, especially on LinkedIn. LinkedIn is where I spend most of my social media time. So that's where you should reach out if you want to connect that way. But if you have your phone handy and you scan this QR code, that goes to the FAQs page of 506B Me, which is where I offer the IT services to take care of the documentation of your substantive relations when it comes to 506B and whatnot. So if you are concerned you might drop your laptop in the bathtub, and then when you get an audit from the SEC, all your documentation has disappeared or been destroyed, you're going to have a big problem on your hands. And that's why I offer that service. But Steve, I know that we do some back and forth on Facebook, but social media, email, phone, website, what are the best ways to reach out?
The best way to reach out is Instagram at steve.trang, stev.trang. You guys can find me on YouTube, iTunes, Spotify, Real Estate Disruptors, and then to get a hold of or to reach out with through our website, it's just closemoresales.com.
I love it. I love it. And that brings me to the public service announcement. And don't worry about this, Steve. It's not for you, it's for the people in the audience. If you've been watching this episode and you've been experiencing weird pains, like searing pains in your eyeballs and like migraine like symptoms, I'm confident it's due to the hideous subscribe button that's right there that you can get rid of for free. And full disclosure, I want people to hit it, because if enough people do, then YouTube will actually start to pay for these videos instead of me, and I think that would be amazing. And the trade off to you, as I said, it's free. All it means is my videos may show up on your list of suggestions, but quite frankly, you can go ahead and ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Steve, I appreciate you joining me today. This has been awesome.
It's awesome. It's enlightening. It's always good to learn more about commercial.
Couldn't agree more. Thanks a lot. Awesome. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B Me or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, and all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.